Ladies and gentlemen, K Kim here with the Traders Club. Welcome to the market update. Hope you guys was navigating the market well this week. And as usual, let's continue with our analysis here. Let's start with the spider, diamond, Qs, Russells, semi, and the banks, and we'll call it a day. Let's start with the spider here on the daily chart. So I haven't changed anything from last week's video, and last Friday was this day here, May 10th, and I kind of actually want to talk about this real quick. Actually, let me go to daily chart here. You know, let me actually remove that for a second, because that's what I wanted to talk about is this recent volatility, those recent shenanigans we've been, right? So you can see if we just kind of zoom in and look at this, what was happening here, we saw about 5% correction, right? And that's kind of, I've been expecting 5 to 7 or 8. So we got to 5 and we're initially bouncing here. We haven't completely broken out to the upside yet, but we're gonna talk about it. But first, what I really wanted to talk about is, even though we see 5% decline, do you know that any short-term traders are not making any money? They're losing throughout this recent decline, even the shorts, even the bears. Because what happens, what's been going on is the dip's been getting bought, right? So then you can see that this is where it closed, this is where it opened. So you saw that big gap down, right? So when you see something like this, and a lot of times the short-term traders, what they do is they don't like to hold things overnight, because obviously they don't really know what's going to happen. They're very short-term, they're very nervous, and they're scared, they're anxious about what's going to happen next day. They don't know what's going to happen, over the weekend, with some news that's going to hit about China. They're just, right? They're very nervous about holding things overnight. So actually, even though we saw 5% decline, none of the shorts were making money. You know why? If anything, they're losing money. And also same with the short-term buyers. Because when you start buying the dip, and that's probably what the dip buyers are doing, and then the shorts, what they do is maybe they short after it gaps down, right? When it gaps down, this is where it closed, this is where it opened. They think that, oh my God, that is it, right? That is the start of a monster move to the downside with this breakaway gap down. So what happens is shorts start shorting, because again, they're not going to short here. And then I'm talking about the short-term traders. They're not going to hold anything overnight. So then they miss out on this gap down. They start shorting it at the bottom. And then when the market sees that move, they have to cover it with loss. And then the buyers who bought anywhere here, when the next day comes, we see a gap down. And you can see big volatility on the next day. So the longs, any short-term longs who went long, chase this and move. When we see a gap down, this thing flushed to the, this is about 285 or something like that. Well, they're going to close, they got stopped out, on their longs. And the shorts who cover, well, now they missed out on that move. And that same event recurring over and over again throughout this last 2 weeks. And I think the biggest one was probably last Friday, right? Last Friday. When I did my video last Friday, I think it was a midday. It was when it was around here. But when this thing got up here, clearing above the prior day's resistance, or at least the highs, well, a lot of people looked at this as, well, double hammer. And I think a lot of longs might have jumped in there. Went long, when anybody went short, right? At the lows, well, they had to cover. Again, these short-term guys are not going to hold anything overnight. So shorts covered, longs start chasing maybe. Well, next day, on Monday morning, we come around, market is down 2 to 2.5% on the S&P. Well, that move, shorts were not able to participate in, and the longs obviously got stopped out. And that's kind of what has been doing. It's just been a lot of these shenanigans up and down. This is why I hate day trading. And I don't believe any day traders make money. Penny stock traders, I don't care who you follow. I don't care what they show you. I don't believe there might be, I don't know. There might be somebody who can have to do it for a time, for a season, for a period, but they cannot do it consistently year in, year out and to be able to make money. Sooner or later, they're gonna get wiped out. And I've talked about this before, and this is why I'm a position trader, long-term investor. I don't do anything short-term trading, but just kind of iterating like what really was going on last couple of weeks, and no short-term traders are making money unless you're so super like, like go along here and close out there and then, whatever. But let's go to hourly chart here. And so, this, you can see last time when we talked about this, this was a gap. I mean, this was a first gap area, right? This is what we track gaps. That gap has been filled, and you can see that instantly that level acted as support. We brought it back up, hit that resistance, downtrend moving average. We gapped down to where there the gap was, right here. This gap was still open. I think we talked about this level last Friday video, and that's where we found support. But what I really want to talk about is, again, we're analyzing now 65-minute charts, so keep in mind that, okay, so we found gap at that, or found support at that gap area. So this gap has been filled. All these gaps been filled, right? So that gap did act as support, and we saw market move higher. Even today, was it today or yesterday? Yesterday, we gapped down, moved right back up here. Gapped down, kind of got back up, pulling back. But, so looking at things in a more minor term, micro term, really to me, 65-minute chart, this chart is a micro term to me. We got lower highs and lower lows, right? That's what you call downtrend. So in a micro term, we're on a downtrend, yes, right? And then for the first time, you can see that we got equal highs there. And that's kind of when you see the downtrend is starting to become neutralized into a sideways move. We're no longer in a downtrend yet unless we see this thing coming down, making new low, right? Making new low and then cultivating another lower high. And that we need both lower low and lower high, because how many times you've seen this thing coming down, making new low, right? Traps everybody and then just goes straight back up. So for the downtrend to continue, this thing comes down, make lower low, gets back up, and then makes lower high. We need that combination to categorize this as we're now back down. We're back into downtrend. But for now, I'm just giving you very, very short-term, micro-term sentiment with this recent cultivation. So we got that equal high. Potentially look like cultivation of right shoulder. We don't know that yet. So now if you really, inclined to do this, this minor term analysis, you can do this, right? So we got these levels. We got this level here, this level here. So we hold these level, bounce either from here or anywhere here. So anywhere around 281 to 285, and cultivate higher low and break above 288.95, then we can say that now that micro term downtrend is a micro term uptrend, right? And then that probably is going to get us back up to right here, 294, which is the gap area. Once the gap gets filled, what does it happen? What acts as resistance? So you can see last Friday, I've annotated this level right here, 282, 288. And that was a level that we're going to watch this week. And we can see that the gap has been filled. So let's get rid of that box. But let's keep that line there, 280. And that's a pretty obvious level, I think. You can see kind of all throughout that level has been acting as that pivotal level, and market did decide to bounce from that kind of pretty obvious 280 level. I'm still in a camp that I won't be surprised to see this thing coming down to retest maybe some of these longer term moving averages, maybe 275. Again, unless we see this thing kind of breaking out here and filling the gap at 293. So if this thing does get up and fill that gap, we're probably going to see this level, this vicinity acting as resistance and pulling back. And we'll have to reassess the situation at that point. And something that I mentioned last week was if this thing continues higher, and if bulls don't want to deal with this gap area and really jumpstart this thing to 300, well, let's gap it up, turn it into island bottom. And we've seen many island bottoms before. We had the island bottom here. We got island bottoms here. And we had island bottom right there. So those are some of the scenarios, some of the levels that you can keep an eye on next week. And we'll come back next Friday and we'll follow up on those levels and see how we played out. Let's go to diamond. And I won't spend too much time on the diamond here. So diamond, I drew this rising channel type here. We briefly went lower, but we kind of got right back up here. So what I want to do really, I think I kind of want to just kind of widen it a little bit. No, you know what? This is what I did. Yeah, like that. So now we're something like that. You know what? I'm gonna get rid of that. Let's just do this, okay? So, because I hate drawing patterns. So let's just do that. So we got support. So last week we looked at 252 and 250 because that's the gap area. The gap area has not been filled. However, unlike Spider, we retested the long-term moving average. That's where we bounced. And then that's a level we're coinciding with the gap area. And so gap is remaining open. And that's actually a bullish signal. When the gap does not get filled, and if we can stay unfilled, that's more of a bullish signal there. And so we got, again, when you go to a 65-minute chart or hourly chart, it's going to look pretty similar to Spider that I've demonstrated just earlier. So let's kind of go with that. That 50 MA, though, did act as support here. That's where we've been stalling, right? So unless we kind of break above it. So I think, diamond, we'll watch 252, 253, and 250 as a pretty strong support. We got that 100 to 200 SMA in that vicinity. But for the bulls to get up here and fill the gap at 264, at least challenge this gap at 265, we need to see this thing breaking above that 50 because that 50 did act as resistance or support there and now acting as resistance now in that vicinity. Let's go to Qs. Qs came down and filled the gap. So let's get rid of that. So again, this is a level that we talked about last week. So let's get rid of that box and get rid of this. So 177.98 is, we got tiny gap underneath it. So you know what I want to do? I want to kind of put this right here because we have tiny gap here, and that's the level coinciding with that long-term moving averages at the same time. So 175, so 177, 175 is going to be pretty strong support going into next week should the price decline. But right now, we're kind of gotten back above that 50 MA, 50 there, 50 there. We're kind of retesting them now, so a little bit of different look here on the Qs. But same look if you go to 65-minute chart, like same look there. You got that equal highs, potentially, right? We don't know that yet. If this thing kind of gets up and start cultivating that, then it's gonna get up in 190 there. So those are the levels watch. We're kind of sandwiched between. We got the down gap, we got some support and up gap here. So sandwiched between the 190-ish, 180-ish, and we're in the middle of nowhere here. So I think the volatility could continue, some up and down shenanigans. So we'll kind of watch that and we'll follow up next week. Let's go to Russell 2000. Same thing here. So last week we looked at 153, 152. This thing gapped down, filled that gap. This gap is filled. So we had that down gap has been filled. So what I want to do though, this is what I actually want to do for the Russell 2000. Got some down gaps there. What I really want to do, so that's what I want to do. That's how I want to look at. So we got that. Don't be so precise with the level because there's very well could break slightly low and get right back up, or this could very well it looks like it's going to break out and come right back down. Just use it as a reference point. So again, had a great move, and we've been just consolidating, right? Just moving sideways, and this is a good thing. This is a good thing. You don't want to see some shenanigan down move. This is a good thing. So I think, again, market's been pretty tricky here. So there's a chance we may break lower before getting back up. But if we do get lower, I think it's an opportunity to buy that dip. But if we hold this level, then obviously same story here. This thing may trying to get up here and trying to fill that gap at around 160. But again, potentially kind of larger version of that inverted head and shoulders. We don't have an uptrend yet. We're in a consolidation phase. Again, I'm talking about an intermediate term perspective. We got up, we're just consolidating. So we got maybe higher low here somewhere, and we need that higher high. And then we can kind of cultivate that uptrend. So I think we're building that. We're preparing for that uptrend to develop here as it's consolidating. So let's follow up next week on the semiconductor. So 107, 109, 104 was a level to watch, and the gap has been filled. Let's get rid of that box. That's right here, 105. What I could do right there, right? So that's that level. And then what I want to do is we got 100 there, 200 SMA there. We got a little tiny gap right here. So I want to actually put this down right in that area. So 105, 101, because again, that's the level. We got this falling resistance, potentially new support. That's the vicinity where we have 100 and 200 SMA there. And then this level here, 100. With a little bit of gap. There's I think 105, 101-ish levels to watch. If we hold these levels, then I think the bulls want to fill these gaps there to the upside. But again, semis broke down. We got straight up. Now it's in a process of cultivating what? Intermediate term uptrend. We went straight up. We need pretty sizable pullback. I don't know. Maybe this is a bottom. Maybe come down a little lower. I'm not sure. But anywhere it bounds, we want that higher low, and before cultivating higher high there. One last one, banks. I'll let you guys go with this. Again, 27, 26, 62 was the level to watch, and we came down, filled that gap. That's where we found support this week. Let's get rid of that gap area and just put 26 there. And we also talked about this neckline, right? Because banks already cultivated this inverted head and shoulders pattern. We broke above it. A lot of times it likes to what? Retest prior resistance, new support. Again, you don't want to be too precise with the level. This is just reference point in this vicinity there. And that was level coinciding with the gap area, and we have that you can see 200 SMA in that vicinity. And I won't be surprised this level being a 50% in the short term, right? Yep. So you can see that precisely that's a 50% right there. We got that gap filled. We got that neckline area. We got that 200 SMA. So this is kind of the level there that we're kind of coiling around a little bit. But then again, we are in a tricky market situation right now, so I wouldn't be surprised. You know what I'm gonna do? I'm gonna put a little bit low. We got that last level of fib at 26.77, 26.27, 100 SMA here. You know what? Banks could. Let's do that. 26, 60, 20, and 25.90 because we got the gap area here too. So we got that 100 SMA here, gap, and the 50 and some fib retracement levels, and then we got the neckline, right? Sometimes market does bounce in obvious levels like this. Sometimes market like to kind of shake some more people up before getting back up. Sometimes it goes up a little bit and then come back down, right? So just keep that in mind. There could be multiple ways the market is going to bounce. Trying to figure out the perfect exact bottom is the wrong approach, right? It's the wrong approach. So just understanding certain levels, the level they're comfortable, maybe accumulating calls or shares or something like that. if you're longer term, and that's why the levels are important. You know what I mean? Because trying to pinpoint the perfect, that precise bottom, that's not the game. It's impossible to do that almost every single time. And so that's what these levels going to help you to kind of understand. Okay, let's say if I go long here, all right, so if this thing do come down 25.90, okay, I'm okay with that. You know, be lenient about it. So that's everything for today. So you guys have a wonderful weekend, and good luck trading next week.